Good afternoon, everyone. My name's Troy Vossler, co-founder of gener8tor, and this is the next installment of the gener8tor Founder Series Spotlight. Today, I am joined by Anders Norremo, founder and CEO of ThirdPartyTrust, and he reminded me he has the honor of being the first exited gener8tor alum to join the podcast. Welcome, Anders.
Thanks for having me, Troy.
Well, why don't you first start by introducing yourself? And normally I say introduce your company, but in this case, please go ahead and introduce Third Party Trust.
Sure thing. Yeah. So, hey, everyone, I'm Anders Norremo. I'm the former CEO and founder of a company called Third Party Trust. Third Party Trust, we're in the cybersecurity space, B2B SaaS solution focused on solving third party risk. What that really means is companies engage with vendors and other, companies, and they share data, they share access, maybe they have employees. That creates what's called third-party risk. That risk needs to be managed. It just so happens with a lot of the breaches that you end up reading up on the news when like the root cause, if you look at them, it's not actually the company itself, it's some vendor that they are doing business with that has access to their data. That's who got breached. So that's the risk that we built a solution to help manage. And we're lucky. When I started now 10 years ago, it was kind of a budding industry, if you will. It started, coming on really, really strong. If people remember the Target breach, that was like right at the founding of Third Party Trust. That was again an HVAC vendor that was doing refrigeration and cooling, checking. They had access, and that's how basically the bad guys, they attack the weakest link in the supply chain. They go in those ways now. So that is, in a nutshell, what we built a solution to just help manage and make really simple. Yeah, that's third party trust.
I like it. Normally, I would ask next, what's your current status and traction and customers, but maybe walk us through a little bit of the journey with Third Party Trust. How were you growing? How did the acquisition come into effect? What was fundraising leading up to that? And then just speak to the extent you can share about the acquisition, and then maybe end with where you're at now with BitSight.
Yeah, sure. Okay. So a lot of ground to cover. Um, so I started, very bumpy ride in terms of like I have a lot of founder stories, just those bumpy first days. Um, I had some friends and family, the three Fs, that gave a little bit of money originally, just enough for me to quit my job and hire two devs, and we just started coding. And yeah, I mean, like one thing led to another. We got one customer. I felt like, we were making some traction. I was still felt like really stuck. I didn't really know how to move forward. And then, funny enough, I went to a conference in Chicago. They were talking about incubators, accelerators. You were on that stage, and I said, you know what, maybe I should apply. That this seems really interesting. And I kind of made it my mission to go to those office hours and get to know about gener8tor. And we got like accepted. I was kind of over the moon. It was really fun. And I would say the big thing there, and I know later you might ask, well, like, why is it so important? But it's part of gener8tor. I just felt like I finally had someone in my corner, some muscle, and a little bit of backing that could help. So I can go into that in more detail. All right. So fast forward in total. So I ended up raising like $1 million in the initial round, and then right before COVID, I raised the only round I did like those, like venture capital backed, and it was two companies, one Capital Midwest out of Milwaukee that I met through gener8tor, and then it was Cultivation Capital down in St. Louis. So those two companies ended up leading a round. That round was like $4.5 million. And that was right pre-COVID. And then that's the money I used to kind of scale the company. The acquisition to BitSight happened, now it's like 2.5 years ago. And I had the majority of that money still in the bank. Like I ran this like very, like, like ran it very efficiently. I had that office down in Argentina and where I had a lot of the devs, but not just that, support, CSMs, marketing folks. Again, I just use that labor arbitrage. Um, But yeah, so the acquisition to BitSight, it didn't happen. Like we can talk about that differently also, but it didn't happen just overnight. Like they didn't just wake up and say, "Hey, we need to acquire a business." It was like many years in the making. So I partnered with BitSight. I built like the best integration. I made sure that my team was ultra focused on being BitSight's best partner. So like I was just like putting up W's on the board, joint customers with them, and eventually it was just like inevitable that this acquisition was going to happen. Timing is everything. They raised $250 million from Moody's at like some ridiculous evaluation, and then when the dust settled of that, like their fundraise, that's when they took the money, acquired Third Party Trust, and that was 2.5 years ago. Okay. Anyway,
What was
amazing.
the total amount of time? So between you founding and starting Third Party Trust and the BitSight acquisition, what's the time frame or amount of time between that?
Yeah, it was 7.5 years.
Nice.
Okay. Yeah, that's from when I quit my job. The idea around third party trust was a little bit before then, but like that was official clock. So yeah. And what else was going to say about?
So you raised about $1 million, and then over the span of 7.5 years, you went from quitting your job, starting Third Party Trust, growing that. You first partnered with BitSight, so they were, a customer distribution channel prior to the acquisition, and then, 7 years later, the acquisition.
Yeah, and the total fundraising went up to like 5.5 million
Hmm.
after the I don't know, we called it a seed. It was like $4.5 million seed round. But that's really all I needed. Like I said, the majority of that money was still in the bank. I mean, we're lucky too. We grew organically quite fast. I mean, we're hitting a lot of your like doubles or triples in terms of revenue growth. It really shook loose in like 2019. Um, I'm a big fan of Lemkin. So any founders out there, like I would study Lemkin and follow a lot of his like SaaS advice. I mean, we followed the curve kind of to a T almost. Like it's very slow at the beginning and then it starts picking up a little bit and eventually you hit that hockey stick. And that was in 2019 for us. So we crossed like 1 million in ARR and then, people wanted to invest in the company. It's like they came to me and said, "Hey, we love what you're doing. Can we put money in?" So, fundraising itself was like impossible for a long time until the point where it was like very easy. And the revenue was the difference maker.
I love it. And then you're currently at BitSight, right?
I'm at BitSight. I'm enjoying it. So I don't know if this is common or uncommon, but I'm actually enjoying it. Someone there thought it was a good idea to have me run, like, not quite half the company, but I run like all the customer facing teams. So customer success, customer support, the professional services division, and also like we call them data management, but our technical research team. So that's like roughly 250 people that I now operate. And it's been interesting. Like what they wanted is to take some of my startup thinking, again, this drive for efficiency, this kind of, hey, like win at all cost type attitude that you have to have as a startup because you're default dead. Taking that thinking again, that's like a switch that's really hard for me at least to turn off. I would imagine many entrepreneurs, it's hard for them to turn that off. So they're allowing me to take that and implement that and really run it almost like a startup within the company where I can make a lot of these decisions, really think about the operational efficiencies of how they're operating, how we're servicing those customers, like, you know, focusing on highest quality at the lowest possible cost. And again, really looking at everything, not just being okay with, wasted, like wasted money and then also low performers. Because that's the thing that's shocking when you get into bigger company, you end up with a lot of those two things, a ton of waste. It's shocking the amount of waste. And then a lot of people that are kind of hiding in these bigger companies that in a startup, you just would never be able to do it. There's no place to hide. But in bigger companies, like, there's some people that can.
Yeah, I see that. Um, I know you're living in Tampa, Florida now. But when you started, you were in Chicago, right? And I guess tell us about your experience in Chicago, especially as a startup founder, as an
Yeah.
entrepreneur in the Windy City.
Yeah. Yeah, sure. Chicago is amazing place to start a SaaS B2B business. Boy, because there's so many companies within like say a 30-mile radius. Oh my God, you can't even meet all of them right in a given year. So it was really good. And like when I started, like my only strategy, um, was to like network locally. I never left the city of Chicago, right? And I just was hyper focused on getting to know anyone I could uh, within that location, anyone in my industry that I could talk to. I'd take meetings with, lunches, coffees, conferences, etc. Um, in cyber, like it's kind of funny, like you're selling to like a risk adverse audience naturally. And when they hear startups, like they want to like run the opposite way. So the only way to really overcome that is to build trust, like as a person, like look them in the eye and be like, hey, we'll do everything we can to make sure you have a great program. Um, so yeah, so I was hyper focused, and eventually, again, I started like branching out a little bit once we got bigger, through the Milwaukee network and what we made through gener8tor, and eventually it kind of grew, and at some point we had customers like worldwide. It was kind of wild, like just it just happened.
I love it. Definitely shout out to Chicago. When did you go through gener8tor and what program was that?
Oh my God, Troy, this was early days, and it was very different then. Like, I mean, it wasn't, none of these branches of gener8tor existed. It's just the gener8tor, the main program where like Joe and Troy were like with us every single day. So this would have been the summer of like, gosh, 2015,
2016.
2016, yeah, summer of 2016, yeah. So my daughter had just turned, yeah, she was 1 at the time. And I remember I ended up getting that apartment like walking distance from the office. And it was really like, I mean, it was such a great experience in so many different ways. Yeah.
I guess elaborate on that. Tell us more about your experience, whether it's with gener8tor, your experience in Milwaukee during that time, with the fellow
Yeah,
cohort, and maybe how did the accelerator help you the most?
sure. Yeah. I mean, again, there's so many different angles to it. I mentioned one, I finally had some muscle in my corner or like in some smart money on the cap table, which was like a big unlock for other investors that were sitting on the sideline, like angels. So that was helpful. Again, the capital was helpful, but that's only, I think, a small part of it. I mean, another intangible, the fact that when I got that apartment in Milwaukee, I was away from my family, which is what I needed because I needed to work from like 8 a.m. to like midnight every single day. Like I needed to put in that time. And if I was at home, it was just impossible with the family, too many distractions. So again, that in itself was a huge intangible that was helpful. I loved our cohort. We had some like mega successful and some flameouts in that cohort. So like we had the total extremes. But I still keep in contact with a lot of those CEOs. One of them is actually why I ended up opening that office down in Argentina was through a contact I made at gener8tor. So yeah, I would say those CEOs were unbelievable. So again, shout out to Pretty Litter, like Dan crushed it. So you got to get him on the pod here. But yeah, I mean, Vivek, I'm still really close friends with. I still talk to pretty much all of them on somewhat of a regular basis, minus that one. Let's see.
I love it. I think one thing that was really special about your cohort is just how much you dived into it. I mean, you said it how the accelerator almost gave you this excuse to be hyper focused and just hustling on your business from 8 a.m. in the morning to midnight every day. And in particular for your cohort, all of you just committed so hard to Milwaukee. And, I think a lot of you were roommates and shared apartments together and living together. And I think that brought some positive peer pressure that just looking back to 2016, that was just a really unique cohort.
Yeah. Oh yeah. Yeah. It was a good time, and the mentor swarm too, and like pitching the business. Like here's the funny part: going into gener8tor, I mean, I knew the problem. I knew like I had a really good idea of how I wanted to solve it, but I had no idea who to sell it to. So when I started pitching it, people were like, what the hell is this?" Like they had no idea what I was even talking about. And it was through like 100 at bats that I realized like, okay, bad targets, good targets. And I started like being able to much like quicker hone in. If I didn't go through gener8tor, like it would have taken me months and months to get that many at bats to figure that out. So it really accelerated my understanding of like the buyer and the market. So that also was like super helpful as well.
Yeah. I know, and I'm grateful that you continue to come back and always take intros to relevant founders that are currently going through generator programs across the country. Based on that, what advice do you have for entrepreneurs and founders that are considering an accelerator?
Yeah, interesting. What I hear a lot of, like when they are kind of considering it, like they are looking at an accelerator and they get hyper focused on one thing, which is like trying to protect the cap table. And I just encourage them to not focus so much on that because what's much more important is speed to market. And again, your default dead. So how do you get out of that state is much more important because really you're arguing over a cap table that is worth like very little, but again has high potential. So it's more quick, like the quicker you can get to like these like the later stages, the better you are. So it's like that should really be the equation that you should do in your mind. Like, do I think that this will get me to where I need to be faster? If so, like, okay, I'm giving up a little bit of equity, right? But so what? Like, if I don't do this, I'll have just a smaller company. Fine, I'm like, I still own the entire cap table, but I don't have a business. So that's a big component that I feel like startup founders like they over rotate on trying to protect the cap table and they're less focused on again, how do I get to like a bigger company faster?
Yeah, I totally agree. I think it's not to say it's not important. Obviously, like you want to limit dilution as a founder, you want to maintain your equity, especially for a, outcome like you achieved with an exit. But in my experience, we've now invested in over 500 startups. We've had more than 1,500 go through our various accelerators, including G Beta. And my anecdotal experience is that I meet a lot of founders that have been successful, such as yourself, and had a big exit event. And to a T, none of them have talked about over dilution.
Yeah.
Whereas I talked to a lot of founders that have failed and gone out of business, and a lot of them have told me, I wish I had dropped my valuation to raise more money. I wish when money was being offered to me, I took more money and took a little bit more dilution. And so it's just interesting to see that play out on the backside as well. And I think that's consistent with what you're saying. Um, all right, Anders, tell us about your favorite part of the generator program, or perhaps the favorite connection that you made.
Yeah. I mean, that's definitely going to be you, Troy, and then Joe as well. I mean, we're still friends today and we still talk about various things. So by far, yeah, like the two of you guys, I mean, I think the days were different where again we were interacting every single day. I mean, you guys were pushing me and my team to go a lot faster, but and showing me that hey, there's a way we believe in you. Like it was very tough. Like I felt my startup journey, I felt really lonely. And when I met the two of you guys, I like finally felt like I have somebody that fully believes in me. And it was so interesting. Again, this is the way Joe would talk about like, hey, when you get here, this is what it would look like. This is what you're going to be thinking about. And I just never even pictured again like this future state. I was just so focused on just surviving in that moment. So again, it's like the two of you guys like made a huge difference. That's why I eventually, of course, like once I got my exit, I'm an LP in Generator now, which I'm very happy about.
I love it. Well, we appreciate hearing it. We feel the same way, both Joe and myself. And it was just an honor to meet you and be able to invest in you. And now to have you, like you mentioned, be an investor in Generator as well. It's just a cool full circle moment, and we appreciate it. The last question I ask, it's a little bit different because now you've exited, but it's, to the audience watching this video or seeing this post, if you had one ask for that audience, maybe it's an introduction, an investor, a customer looking for advice, what would your ask be?
Yeah, I mean, this one for me is easy. Like, check out Generator, apply. If you got a startup, apply, go for the program. I think it's an amazing program. I will be an investor if that happens, right? So again, that would be my ask to everyone is like really consider it. Again, it was very helpful for me. Again, it helped me in a lot of different ways I didn't think about, right? I just didn't know. So accelerators can be very advantageous. So again, if there's anything that people can take away to it, it's like my experience, like all the positives. And then I would say, hey, give it a shot, talk to them, keep an open mind, apply. And who knows, it might be a great fit and it might accelerate your business. So that would be my ask. Give it a shot. Like, don't be afraid to take a look and don't over rotate on protecting that cap table.
I love it. Well, congratulations, Anders. Thank you for joining us. Anders Norremo, founder and CEO of Third Party Trust, acquired by BitSight. We appreciate the time.
Thanks, Troy.